Hello and welcome to 10-minute stock pitch, where most of our stock pitches are over 10 minutes. Today we're going to be doing Louis Vuitton Moet Hennessy. Please pardon my French. I'm no good at it. Um, Overall, I gave this company an interesting rating. I think it's very interesting, especially if you're looking at things maybe over the 100 billion mark or so. I definitely think it has a lot of potential. It's been managed well. Capital allocation seems fine, especially given the fact that it's over in France, and uh, things investors want and desire over there are going to be a little bit different, right? So, normally I would probably dock a little bit more points for dividends versus buybacks, but I understand that you know dividends are pretty important, maybe more so in Europe than in the U.S. As far as stocks I'm not saying that that's a hard and fast rule or anything, but I've just noticed that it seems like a lot of European style companies that do well tend to favor dividends over, say, buybacks. Maybe the tax laws are different over there or something. But it's just, I don't know, trend I've noticed. Um, so you can see here, average free cash flow yields about 4%. Um, you know, Current growth is looking at like low single digits, somewhere around in that range. And on average, that seems to be about the case here. If we're looking at just straight revenue growth, it looks like they grow their earnings per share a little bit faster than they grow revenue, which is always a good sign. Seems like they have a focus on the bottom line. And all the things that they're doing for earnings, not just for the sake of extra sales. So that's always a good thing to see. Free cash flow plus growth is 14.7%. If we look at return on invested capital over time here, you can see, there's only really a couple years where it hits 9%, and then only 1 year that it goes under 9% in the last 20 years here. But most of it's like high double digits. So, I mean, in your, $300 billion market cap companies, I honestly think this one's pretty interesting, not to mention the fact PE is 20, maybe a little high, but considering the fact of what a lot of other companies are asking for in the PE range at this valuation, I think that's pretty fair. EV to sales 3.4, a little high. EV to EBITDA at 10. For this price range, that's pretty solid. EV to free cash flow at 21.9. Again, just to the edge of kind of starting to get expensive there. But at this range, this company would interest me. If I had to pick stocks in this kind of market cap range, I really think that this one would be quite interesting. I gave the business a 7. The primary reason for this is because they're big. If this was a smaller company, I could see it getting a little bit higher rating. The issue for them is finding growth is going to be difficult. Obviously, they found ways to do it. And they still have the same management in place. The management does a great job at finding growth for such a big company, and I think they'll continue to do it. I was looking over some of the recent developments and everything, and they got some big partnerships with F1 and a bunch of other people that I think will bear fruit. And then they also invest in smaller and growing companies too. So they like to bring a lot of brands on and then kind of like merge their staff with it. I worked with some of their brand ambassadors personally, and they seem to all be very well trained, and they seem to be very dedicated to the business. They seem to have a vision for the product, and they seem to be very confident in the quality and the success of their product. So I'm on the alcohol side, which is a little bit lower part of their business. We'll get to the percentages later. But yeah, I think this company has good structure and pretty good business strategy for how big it is. I think it's pretty cool. If we look at revenue by region, you can see United States and Asia are their two biggest regions, followed maybe by Europe, and then some other markets. As far as business group revenues, wine and spirits, which is where I probably know them the best, is going to be 8%. Fashion, luxury goods, 49%. That's their biggest area. And then, watches, jewelry, cosmetics. This is the only thing I didn't actually look into, selective retailing and other activities. I'm not 100% sure what all of that transfigures, just to get a handle. And if I walked you through all of the brands they own in this would be over a 15-minute video before I got started on anything else. So I didn't want to bore you with all that information. But if you're looking, if you find this company interesting, this may be something to look into as well. I mean, it's more important than perfume, cosmetics, and wine and spirits. So, that's a little rabbit hole you may want to go down into to get a good understanding of what all that means. As far as Moat, they have some really strong brands here, so I give them an 8. They also have a lot of kind of efficiency effects because they have such a large, um, a large network of companies, and then they also have a large network of advertising, not just in single countries but globally, right? Anything people know, I mean, people talk about the LVMH brand all the time, so um, it definitely has a good moat. It'd be difficult to get into some of the areas. A lot of the places that they operate in as well. There's not tons of companies that do that, right? I mean, for example, there can only be so many champagne houses in France. There's only so many luxury watchmakers with hundreds of years of history and things like that. So there's a lot of stuff that they focus on that, it'd be very difficult, if not impossible, to try and create a brand. I don't want to say impossible, but it would be not worth your time to create a brand to compete with some of the things that they have. So that's just something to look on. Obviously, in the fashion industry, there's tons of competition, even in the luxury ones. But the ones that they do have, they have great brand names already built up for, and pretty loyal clientele. Even if you're a shareholder, they have specific shareholder clubs where you can go and get access to their products and deals and things. And even that's even that has a following. You know what I mean? So they're very. I think they're very wise in the way they set up their companies and their promotion schemes and everything. As far as cheapness here, I give it a 5. This is just objectively cheap. If we're talking companies that are, over a couple $100 million, this would probably go up to like 7 or 8. Things in that range are just very expensive on average right now. Some of them for good reason, some of them just because I think. but yeah, that's what I'll say on the cheapness. But I mean, objectively, it's basically a 5. Nobody's saying 20 PE is super cheap. EBITDA just under 10. Not crazy cheap or anything. EV to free cash flow 2.1. EV to sales 3.4 is pretty expensive, and price to book at 4.3 is probably expensive. So, getting onto the management side of things here, I gave management an 8. This was kind of taking into account a little bit of the fact that, again, as I said, if they're buying back stock versus dividends, I'd probably give them a little bit higher of a score. But it seems like their capital allocation has been very well. I've seen kind of over time how they kind of build brands and incorporate things into their, into their brand name, and how they push things. I've seen some of their firsthand side of how they do trainings for some of their products and stuff. Again, I'm on the alcohol side, so that's not their biggest area by revenue. One of the issues that's always going to be hard for this company is being a global company. We're starting to see, I mean, pretty, we've seen pretty decent and drastic moves in currencies lately because of inflation issues and just how that's trickled down. So that'll always be an issue for the company. I saw some of their top line results in individual countries are moving 3 or 4% just because of currency conversion. So that's always tough, and there's not really an awesome solution for that. You just gotta kind of have to take it as you get it if you want to sell into other countries. But I couldn't find any metric where I wanted to give management a bad score, except for, of course, I prefer them to buy back stock over the dividends. So that's why it's at an 8. And also the other issue is it's such a big company. Even if you have amazing top management, just controlling something like this is very difficult. Just to have good focus on all parts of your business is just going to be difficult. So I don't know that I could ever perfectly say that management's doing an amazing job on all these businesses, because I mean, even for an investor to look through all these individual brands and compare them against other ones would just be would be insane. So I imagine it's difficult for them as well. But it seems like so far they've done a pretty good job. So so a total score here of about 70%. As I said, anything around 80% is probably very good. It would be very rare anybody would get, much over an 80%. As I mentioned in all my videos, if it's a good business, it has a great moat, it has great management, it's very rare that it'll be cheap. But as far as, if you ask me a company that I had to buy in the, over 200 million, or sorry, 200 billion range, this is one that actually looks pretty interesting to me. Um, you know, it's definitely still a cyclical goods. When you look at like economic theory and stuff, they'll tell you luxury goods are cyclical. Um, you see some of that here, but really not a lot. I mean, if you look at just from a return on invested capital standpoint, one of the worst recessions in recent history was 2008. So you have 13% and only went down to about 9%. COVID here, we saw it drop to 7 from 12. That's really not a big drop. So just because of all the things that they have, and I think how some of the worldwide economy has shifted. I can primarily only speak for the U.S., but the middle class is kind of dying, right? So a lot of the people that are in the upper class that would be more geared towards buying these types of goods, they're fare a little bit better in recessions nowadays, I think, than before. Whereas when the middle class would get hit by a recession, these things would probably drop a little bit more in sales. But I don't know that we've seen that in the data too much. The stock is a little bit cheap right now. If you're looking forward, they're not expecting a lot of growth next year, as far as I think as far as guidance I saw was saying. So it might be kind of cheap now. So if it's something that you've wanted to own, maybe for the long term, this could be a good time to get invested into that. So thank you very much for watching. I hope you enjoy, and let me know what you think.